Welcome back, master students, to Strategies 1, Week 9, Moment by Moment. Team, this is a critical turning point to your mentorship program here with me. And I say this because this is the moment where I'm going to teach you how to determine price action moment by moment. And there is a bit of discretion here. This is outside of systems. This is certainly outside of typical behavior. It's outside of traditional statistical practice. You know how we do the back tests. You know how we perform volatility versus momentum outlook. We can do a formation outlook. We can even do a typical weekly outlook. Many ways for us to determine probabilities in price. So this could be the epitome of discretion. And I will say that alongside the statistical probabilities of using volatility versus momentum or any other criteria as such, this could be one of my stronger suits, personally. But first, good morning, master students. Good afternoon. Good evening to you. I hope everyone is well, and I hope everyone is ready for this shift here. So I do ask that if I have non-registered strategies master students in here, to please consider exiting the stage now, because this is a critical turning point. And this is somewhere in the lectures or in the master's program that I would like for you to not necessarily have, probably not have visibility into just yet. This is a little bit, this is a little out there, and I would need some of my more, my more enlightened students. So welcome back, everyone. Let's go ahead and get this thing started. To determine price action is I gotta say, it's an art, and I will ask of you to determine price action from my 1 a.m. Chad, that's right. From my 1 a.m. Pacific time, PST, which is going to be 4 a.m. market time, Eastern time. From Euro Open, okay? We're going to learn together how to determine price starting from Euro Open to traditional market close that day. So what I'm trying to say here is that I am going to display to you how to determine price action over the span of 12 hours. And we're going to start at 12 hours. The 12 hours is considered, it can be considered your complete day. Starting from the Euro Open into the early into the traditional pre-market, into the intraday session. So a way to get this started, and remember, this is the epitome of discretion, guys, okay? So, Niz, my brother, very good to see you here. No need to apologize. No need to apologize, my brother. Good to see you. Now, what I'm going to say here is that the trajectory that I've chosen here doesn't have to be in the order that you see it here. You can shift the order. You could manipulate it or adjust it per your discretion, per your liking. You're going to hear me say this word a lot here. Trust me when I say that I tried to put down a PDF list for this probably 3 or 4 times before I realized myself that there can't be. It really cannot be. Because you can have it written down, sure. You're going to have it recorded here, so it's a technical write down anyway. But I can't put it down because every single asset has its own behavior. It has its own character, its own criteria, its own persona. The collective group, the collective whole, psychologically speaking, between Meta and Tesla, there's a critical difference there. It's an enormous difference. It's not the same person, right? It's like it really is like saying Jeff Bezos and Elon Musk, both incredibly successful and incredibly intelligent, but two very distinct individuals who are built with very different things, who have been brought up in very different ways. Okay? So, yes, Stu, that's absolutely incredible. How every ticker it really is. The collective whole of every individual ticker makes its own character, it has its own signature, psychologically speaking. And it's up to us to determine that and to study it and to acknowledge it and listen to it, right? Observe. So, one of the ways that we can start determining the price action is to stay away from your daily time frame. Now you're gonna get this from me is because I don't want you to I want you to focus on the closing post market. Now the reason why I want you to focus on the post market is because that's where you're getting the information continuing after the market closes, right? So on the daily time frame, you will not get displayed the extra information that you would. We already know this, right? You won't get displayed the extra information like the 12 hours. So for example, Meta, daily time frame closed by traditional market close 573.25 in comparison to the 12-hour time frame at 572.23. So that tells you that there was further information or further data and further price action or further participants after the fact. This information is critical for us to use into determining what the next step could be. So the next step, if you would like to guess from a daily time frame, would be into the after hours using just this here. Then you would potentially think, well, let me use the daily time frame to determine what could happen into the next time frame. But no, this is why I want us to use a 12-hour time frame. You can also consider a 24-hour time frame. The 24-hour time frame displays to you the entire trading day, including the after hours price action. I tend to use this, but I don't use it for my data. Okay, so I'm going to teach you the way I know. Let's see. Buzzman saying, is trading behavior in formation the same as the after hours? Yes, absolutely. I will say that that the formations will have a slight difference in the after hours due to block trades and block exchanges through institutional repositioning and positioning. So the institutions will reposition things, and they will tend to end at the price, but this is going to be at a single candle. So it could be the birth of one candle and the birth of another candle, and it just made the formation. So in a way, it could be very, very dangerous to try to use the formation theory inside of after hours. But here's the thing: using formation analysis, continuing from intraday into the post hours, or vice versa, pre-hours, intraday, or several days of both intraday and post and pre-hours is absolutely valid. Now, not a lot of people know that. Not a lot of people know to use the formation post hours anyway. So, granted that we now know this information, let's take the next step. Granted that we now know all this information, let's take the next step. Our next step would be, or actually the first step, would be to identify the close. What major closures did we have into determining what price action may do the next day? Number one, we have a daily closure, always. And without mention, anything under an hour, anything under the daily, of course, closed, right? So your 12, your 8 hour, 6 hour, 4 hour, and so on. I'm not going to use those just yet, but there is use for them. Now, in this case, we're going to identify what else closed. We notice now that the 3-day closed. And the way that I can tell that the 3-day closed is because it doesn't have a time marker to expire the candle. The 3-day close does not. See? And the buy daily close does. So the 3-day closed. Looks like the 4-day is still going. The 5-day still has 4 days and 5 hours. And we got a weekly close. What about a biweekly? No. The biweekly is still counting down. Monthly looks like it's got 5 days to go. Bi-monthly, same. 3 months still has 2 months. 6 months has still 2 months and 6 days. And the 5 months still has 5 days. Okay. In order for us to determine where we're going, we must know when we are. Okay. So it is critical for us to always remember when we are. Okay. In this case, remember, daily, 3-day, and weekly closures. The first step to this is just start marking off your 50% retraces on all of them. Don't follow the price action just yet, right? We know to follow price action, of course, but let's start marking off the 50% bar retrace because we were already close to closing and we closed. So typically speaking, the candles tend to retrace by their close. Here is a piece of note for you. If the ratio of a 30-minute candle, a 1 hour, 2 hour candle, and 3 hour candle, if the decompression level tends to be anywhere between 7 to 9 minutes before it's closed, so meaning that you have this, let's go ahead and draw a solid box here like this. And let's just say that the candle was going down, right? Continuing to go down. This is a 30-minute, 1 hour, 2 hour, 3 hour candle here. Okay, continues to go down. And as soon as it starts reaching your 7 to 9 minute mark, those candles in particular will start decompressing to their mean or start regressing to its mean roughly at 7 to 9 minutes to its close. So it will already, and remember, this is very typical behavior. It'll already start to decompress back to its 50%, thus leaving a large wick, just like this did here. Now, sometimes it'll close at its 50%, sometimes it won't. Sometimes it'll reach its 50% and continue downward and close at a lower valuation, in which case the next candle could be subject to returning back to that 50%. Okay. So if I'm giving you a 30-minute candle, 1 hour, 2 hour, 3 hour candle, 7 to 9 minutes, well, I can go ahead and give you maybe an average of a I would say, let's see, the 4 hour candle would be really a kind of a in between. That's your extra medium, right? You could give it I would say a 9 to 15 minute turnaround for the 4 hour to start retracing or decompressing. Now let's jump into the 6 and 8 hour time frame. The 6 and 8 hour time frame candles typically tend to decompress from their loss or gain at around 15 to 20 minutes. 15 to 20 minutes to closing the bar will start to decrease. So in this example, let's just say that we were pumping green, right? 6 hour and 8 hour candle reaching that 15 to 20 minute average starts to decompress back to where the 50% could be located. Typically speaking, same rules apply to the downside. Okay. Now, what about a daily candle? A daily candle starts to retrace at about an hour from its close. Hence your power hour. There's a shift. There's usually a shift at the major time frames. 30 minutes into the trade, we have your 1, 2, 3, and 6 hour closes. From intraday, the moment that the market's open, 30 minutes later, you have your 1, 2, 3, and 6 hour close. Lunchtime NYSE, you have your 1, 2, 4, and 8 hour closes. And you see how price shifts around those times. So if I'm giving you a ratio of about 1 hour retrace for a daily candle, we can only assume that a 2, 3, 4, and 5 would be roughly around that hour mark too. 2 hours for a buy daily, 3 for a 3-day, 4 for a 4-day. Give it, give or take at around the 4 days, right? Because we're getting larger there. Good to see you, Guardian. And your 5-day time frame, yeah, more or less 5 hours. What happens when you start reaching a monthly? What happens when you start reaching a bi-monthly? What happens when you start reaching 5 months? Which, by the way, just to remind everyone, we have 5 days and 4 hours to close. The monthly, bi-monthly, and a 5-month candle. So speaking on, let's say, about the SPY, using the S&P 500 as an example here. That seems like a lot of upside. And can anyone tell me what this formation is here? Please go ahead and let me know in the chat what this formation is. That's right. Now, what typically tends to happen after a 3 white soldiers that's right. It's a signal of a potential reversal. So our regression is going to turn, is going to shift with considering behavior. Right? So now, can you tell me another signal here? Can anyone mention any other signal to tell us that there could be weakness to the bull thesis here? Look very closely. What else is there? That's right, guys. And this is why I'm asking for my, this is why I'm asking for my registered strategy students, because you've already had the experience with me. So it wouldn't take you too long to determine that you have a bearish divergence, volume, 3 rising methods. Now you have a buy strategy. 2 reasons why price action could retrace. Right? What about the 3rd reason? Oh, wait, didn't ARCa say that 60 to 70% of the time we get the prior bar retrace? Okay, that one too. But wait. He also taught us that there is a moment of decompression before the close of these candles. And that's approaching here. We're 5 days away. And we saw the SPY give us some really interesting head shake as of the last few days. And typically speaking, when you're reaching critical resistances, you're starting the head shake on top, right? You get jitter. And that jitter tends to give you a signal. There's anxiety. Could this be the top? Could it not? I don't know. But what I do know is that we're 14 points away from an all-time high, from a $100 mark, making it the last reason why this could potentially shift in a technical and statistical manner. How are we to think that we're just going to continue to the upside? Sure. Anything can happen in the markets, but remember, it is a probabilities game. So now we know that we have all those closes coming up. That's good. So let's get back here to, I think we were under Meta, right? You were right about here. Okay. So just for our own pleasure, I guess, let's just go ahead and mark off the 50% of these macro times as well. You never know. We could be finding some type of confluence somewhere, right? So, yeah, and you know what? We're going to maintain a little bit of a composure here, right? So let's just make sure that we can be as organized as we can be and say that this is the 5 month retrace. We know that it's 30 to 50%, but we're marking it at the 50% just to, for whatever. So let's go to the bi-monthly time frame, measure that bi-monthly, let it give us the 50% of the range, and we're going to start seeing all the things kind of rhyme here. Little by little, we're going to start noticing. Okay, so this is going to be your 2 month retrace, your bi-monthly. Okay, now let's go to the monthly time frame and mark that off too. The monthly time frame is really interesting because it's starting to look kind of like an evening star, isn't it? Or a shooting star. One of those two. It's starting to look a little suspect there, is my point. Okay? And we're already beyond its retrace. So it's okay. We can go ahead and just maybe skip this one, but in discretion, we could maybe use that 582, 583 as a resistance for the immediate short term. So since we are talking about short term and giving us the price action for the span of about a 12-hour time, or maybe I would say 8-hour time, then, actually 12-hour time would be the better way to look at it, right? So yeah, we're going to use the monthly retrace here as well. So let's just mark it off and say that this is the 1 month retrace. Okay. Now, oh yeah. Yeah, I love, man, Jen, I hate it that you, sometimes, you're on another side you're on the other side of time here. I gave you so much credit the other day. I wish you were here. I gave Jen the credit saying that she's, you guys remember, right? But I think she deserves to know here, right? You gotta be one of my, I think you're probably one of the students that have learned the fastest, right? So you have this knack to sponge whatever you're learning, and I gave some acknowledgement to that the other day. She's Canadian. Yes, I was giving you flowers, and I think that it's a very good thing. So I had to give you as an example because, sometimes some master students will come up to me and say, "Hey, I need this or I need that," and I'll start focusing on that student because of their needs. So in Jen's case, I had to kind of push her a little forward. And I started giving her information that I haven't necessarily given to all of the strategy students just yet, right? Because the demand is there already, so we can speak of further strategies and speak of continuation. So now we know that we got the monthly close, right? And we have, you know what? We're going to go ahead and color these slightly different as well, right? We're just going to mention these as as a blue color. Here we go. Every single closure of these macro times or any closure that we're using here are going to be mentioned as blue. Okay. So now let's go back down to the weekly time frame, right? We got a weekly close on this. The weekly close is already at that point. So let's mark it off and say 1 week retrace. Good stuff. Okay. And we know that we got a 3-day as well. The 3-day is confluent to the weekly time. So now we can say 1 week and 3-day retrace. As always, traders look for confluence. We look for the rhyming targets. 1 week and 3-day confluence. Okay, now we know also that we had the daily closure. Daily closure is telling us that we have a 50% retrace, 576.49. You see how random these times are going now? I'm going to display to you something else. Okay. So the daily time frame has the daily retrace located here. So let's go ahead and put 1 day retrace. Okay. Now that we have these located here, the price action is at 573.25, right? Okay. So why don't we actually make or separate the lines that we have going down versus the lines that we have going up? Because it appears as though the shorter time frames are suggesting up and the larger time frames are suggesting down, right? So that already gives us a sense of direction for the immediate short term, doesn't it? This is how we're starting to determine that, oh crap, wait. This is making sense now. So using the macro closures that we have, it looks like we're cascading time. It looks like we're dominoing it into time. And that's generally how we use this. So if the daily retrace closed at 573, if the daily time, closed at 573 and our retrace is upward, right? It would be telling us that, man, there is a probability of here going towards the upside first since the daily close. So 60 to 70% of the time we'll get 30 to 50% prior bar retrace. That means that at the open of the next trading session, we would make an upside move. Now, would we make an upside move following a continuation to the downside? Well, we don't know. That's what we're going to figure out. So let's separate just ever so slightly here. Let's just separate the time frames that are suggesting the upside. Okay, daily time frame and monthly retrace. Okay, wow, and we're already retraced at the weekly and 30 day, and then 3 days. Sorry. Okay, very cool. So now that we have these things noted, let's just kind of observe. Let's respect or give this some acknowledgement here, because now we can see that the price action on Meta feels a bit frothy, right? It doesn't mean that it's not going to continue towards the upside. It just means that, sure, we could experience short-term upside, and short-term upside can be 15, 20, 30 points. That's okay. But we're here to determine the micro moves. So while we have the 5-month retrace all the way to 518, I don't think that we would make that 518 in a single session or two. So why don't we just go ahead and maybe leave the 5-month in the back burner? Okay, we'll talk about that later. Even still, the 546 at the bi-monthly retrace, right? Sitting at 546 to 573, that gives it a little bit of a higher probability. Sure, that's, we can do that. It does smoke. It does look like the SPY. It does. So it's giving us this a little bit of a larger move, right? Sure, it's still 573 to 546. It's outside of its daily ATR. So the daily ATR is what we have to focus in on here. Now let's start finding what those potentials could be, right? Because we have about $12, right? So what's to stop us? Here's the thing, right? Here's the thing. We have a weekly retrace that we're already at. So technically speaking, there could be a support. I don't know if the support is valid, but I can say that there is a gap below the day. And we know that, yes, we fill the gaps 80% of the time, but do we fill the gaps 80% of the time on Meta? This is where our statistics come in. This is where we would start to ask our system. We ask the language model, give it the data of the daily time frame, and ask how many percent of the time do we close a gap to the downside from present price or a higher valuation? Then we'll get those probabilities. So for now, since we don't have that data, we're going to go ahead and identify this via discretion. Discretion is telling us that we have a massive shooting star on the daily time frame. Granted, it's lesser volume though than this here. And we are kind of dropping volume 2 overall here, right? So there appears to be a little bit of a weird shift. But if we look at a shorter time frame from this point, then there could be a bit of an increase too. So immediate short-term time frame weakness is being presented here, and that's okay. All right. So if the daily ATR is giving us a retrace of about $12, then we would only assume that the retrace here would get surpassed because we got a deeper closure. We got a deeper retrace in line here. So $12 all the way up there, right? So that kind of leads towards the monthly retrace. Now, do we have any reason to go back up all the way to that monthly retrace? Well, now we have one reason. It's the prior bar is retracing. Granted, yes, 576.49. Now, the 576.49, if we're focusing on gaps here, that may present a problem. Also, there's another gap right here that's confluent to the top of this candle. Holy crap. So then your probabilities are starting to kind of diminish here. Now, typically speaking, here we go. Here's the next thing. What is the next catalyst? What's to tell us to give us a potential upside continuation? Niz, that's right. Oh, you're asking me. Sorry. Yes, it would be earnings. 576. Nice. You mean resistance? Yes, you're answering the catalyst question. That's right. So we know that these tickers tend to run into earnings, right? Especially when we are expecting. What's the general consensus here? Are we bullish Meta or are we bearish Meta for its EPS? What are we thinking here? We can discuss it shortly here. So Chad is bullish on Meta's EPS. Now, they're supposed to beat is what Smoke is saying as well. Okay. So are we thinking that this is going to beat and have upside price? Now, it's bullish because of all the AI advancements, right? And that's an important thing to acknowledge here. Okay, so we're getting the reason now. So we're now understanding that the catalyst could be earnings and it's backed with an upside probability using the artificial intelligence advancements that it has under its belt or under development or potentially already demoed and released or announced or intended on an 8K or something or whatever. But we have many reasons to consider a continuation to the upside that can be greater than the daily retrace of 50%. And I will say that the technical reason here would be, well, the monthly time frame is coming to a close. And we know that as we start approaching the close of those major bars, they start decompressing towards the upside. So, could this last day have been the retrace to the monthly? That is going to be our ultimate question because you can see price on the daily. But it also did come back a few times. It feels like it already did 1, 2, 3, 4, 5, 6 days in a row of retracing to the 50% of the monthly, and it can't get over it. Does that tell you something? So it's telling you that we have resistance at the 50% monthly prior bar or monthly existing bar at this point because we're decompressing. So that's already telling you like, holy crap, we're really resisting at that monthly retrace. So it's important that we jot it down and it's there and we keep resisting from there. It doesn't mean that we can't reach it again. And in fact, we may be able to reach it again and is there something up there that has to, that we may have to just finish? Well, there sort of is here at 586.27. There is a gap there. We haven't closed that gap. And we are talking about 80% of the gaps being covered. Well, maybe there's a reason for us to get up there outside of the catalyst, outside of the technical, and outside of the statistical probability. Holy crap. So now discussing this together, we're identifying that there actually may be an upside here. There actually may be a reason for us to continue towards that upside. Damn it. Okay. We're breaking down every single little step of the way because this is what it takes. The market prep is important for you. It's not going to be fast, guys, at first. It's going to take you some time. So when you say, I need you to think about this. I need you to think about this, okay? When you come up to me, and I'm saying you as general, anyone, right? When you come up to me and say, ARCa, ticker symbol XXXX, what do you think? And you're hearing all this. You're hearing what we need to do. What do you think is going through my mind? You know? I'm not, there's no way that this, don't take it as a complaint. Take it as inspiration. Because in other words, you are without knowing, right? Without knowing or without any type of insight to the inside of my brain, you are asking me, ARCa, what do you think price is going to do from the Euro Open all the way to market close the next day and potentially at the end of the week? And how much do you think I should put in? And we've taken this time to determine all of these facts for now. What I'm saying here is that you're going to have practice and you're going to go over this. You're going to go through the rigors of repetition. Right? So sometimes when you see me complete a ticker in 5 minutes or 10 minutes, sure, I may put things to, I won't look at the OHLC because I'll just hover my candle over it and put the target right away. And I'll average it with a zone and give you my targets so that I can be able to save time. Yeah, that is asking for lightning in a bottle. That's really interesting to say it that way. So I'm averaging everything into one. I'm thinking, does it have earnings? What are the closures coming up? When are we right now? Did we close a daily? What other days did we close? What can we retrace? Are we going down or up? What the next step to this is, what are the psychological formations? We have a shooting star giving us a probability for downside, but there's a gap below it. So that means that we could support from that gap below, followed by an upside continuation. Why would we make the upside? Now, if we do make the upside, does that reason to the upside tell us if it's strong enough to continue and get to the target to the upside in the first place? Well, in this case, we're identifying that earnings would be a pretty good reason to get us towards that upside. Second reason would be the 5-month retrace, or the monthly retrace, telling us that, damn it, we're getting pretty close to that closure. And ARCa said early on that monthly candles would be predictive and not forecast. Damn. Okay, so granted, we have the monthly close coming up. That gives us a bigger probability. The daily time frame is already suggesting the upside, so that means that if the daily time frame is giving us that upside probability, then we could cascade or domino effect the immediate short-term time frame on the way up from 573.25 to 576.49, which is the 50% of your prior day or the existing day that we just closed. And we got to see how strong the move is to the upside from those immediate times. Now, if we get enough thrust from the 15:30 into the hourly time frame, we can only assume that our bi-hourly and 3-hour would feed it. Now, will the 1, 2, and 3 feed the 4? The 4th hour is my most critical time. I need to know that the 4-hour has volatility expansion and an upside pivot on stochastic momentum. If I don't have that, I cannot suggest a continuation. RKLB on Thursday was given to us as a squeeze going to $20. And I said, no, it's not. I'm sorry. I don't give a shit who it is. I do not care. Because numbers don't lie. People do. I will never, never trust anyone's word like that. Unless it's directly from the institution saying that they're about to purchase $10 million of this asset, then I may believe it. And even still, I'll be doubting it, because why are you doing that in the first place? The market is dark. The market is full of deception. And likely, the only place that you're going to get your answers are through your own discretion and ability. Going back to the 4-hour time frame, now we know that the 4-hour is the critical time to give us continuation in a larger perspective. So if you're 30-minute to the hour, bi-hourly, and 3-hour, feed the 4-hour now. Holy crap, that's telling us that we may actually have upside continuation. What is the ATR? So that brings me to the next point here. How to determine and continue to tell me what price is going to do into Euro Open. We haven't even gotten there. All this information was just a breakdown. And all of this information was for us to prepare ourselves psychologically. What I am asking you to do here is to make sure that you observe this in whatever order that you want to observe this in, but observe it without regard to your position or personal bias. Your personal feelings over this going up or down do not matter. It's the chart. Do what the chart is saying. It's as simple as that. Read the signals, okay? Let's continue on to the next step. Okay, in order for us to determine what price may do into that next step, well, let's go back to a granular time frame, right? Let's go back to the 30-minute. Please excuse me, team. My voice is, my throat is itching. I need a drink of water. Just a sec. Things are going to get really discretionary here. Very, okay? And know that your assignment, now I'm just going to give it to you now. Your assignment doesn't need to display to me that you were right. It needs to display to me that you had thesis and you had a reason to believe that price action was going towards a direction. But the direction that I'm asking you for is moment by moment. At the open of your Euro Open to the open of your early pre-market to the open of your pre-market traditional equity to the open of the market to midday into the close of the market is the implied direction that I want from you. I want you to choose a ticker and you give me that criteria. What is price gonna do? So we're gonna make sure, one more time, right? We're gonna make sure to give me from the moment that you remember, because we're gonna analyze the charts here from now to the Monday's session. So in this case, I'm going to give you my personal thesis over what Meta may do into the open of Monday. So Monday's Euro Open, for me, that would be 1 a.m. Pacific. That would be, I believe, 3 a.m. Central and 4 a.m. Eastern. If I'm incorrect, please excuse me. So I'm going to determine what price is going to do into Euro Open, what price is going to do during Euro Open to the open of the early pre-market, which for me would be Pacific time, 4 a.m., 7 a.m. Eastern. What price is going to do from that early pre-market open to your traditional pre-market, which for me is 6:30, 9:30 a.m. Eastern. And what price is going to do into market open, traditional hours, into the midday, into the end of the day. Again, I am not asking you to be right. I am asking you to start your drills, because this is going to be me sharpening you for the rest of your career. Now, Cliff, I expect you to be, brother. This is going to be amazing. We're going to sharpen us to become bulletproof. I want us to become high probability performers, which is, again, why I'm asking for, the strategy registered students to be here. This is a critical turning point. Every single time frame that I give you, iron sharpens iron, is right, Smoke. Good, well said. Ooh, Cliff, thank goodness. Every single time frame that I mentioned here is where I want you to average out price in its direction. Never give me solid numbers. Always give me a zone, okay? Always give me a zone. My brother, I'm sure you're going to do great, Dea. Always give me a zone, okay? So let's figure it out. Here we go. We're going to an immediate short term. This is how you're going to know not to be nervous. I'm about to give it to you, okay? Now, we know that volatility gives us the, per se, if you're in a car and you're gassing it, right? You're hitting the throttle on the car harder. That means that the car is going to go even faster, right? It's going to go faster in one direction, whatever that direction may be, whether it's east or west or south, north, right? It's going to go faster in that direction, whatever way it's pointed, which is why we're using stochastic momentum. We want to determine what side stochastic momentum is favoring and what side we're either throttling or decelerating from. So which way are we accelerating and which way are we decelerating from, right? Okay, well, we're getting a little bit of consolidation here on the 30-minute time frame. So we're going to have to use every single probability here. What about the 10-minute? Okay, so the 10-minute time frame appears to have a pretty decent downside. I want you to always remember that these kinks matter, right? When you get a kink like this, it's telling you that there could be some weakness. Well, I would use personally a stochastic momentum. The stochastic RSI gives it a little bit more of a exponential field to price action. So I would personally use stochastic traditional smoothing and traditional closing period and look back, because the stochastic momentum will give you an overall feel. The stochastic RSI would be the happy medium between a traditional RSI, which is very exponential to price, and the stochastic momentum, which is incredibly delayed and very much average to your overall price over a closing period of 14 simple and 3 exponential. So I would personally look at the delay of the stochastic momentum, right? I like it to give me the overall feel. Look back, take your time to give me the direction. I don't want you to give me the immediate time frame, because if you give me an immediate look back, I feel like you're not giving me what I need, right? You may be over exaggerating that this may actually go towards an upside and break out, when in fact the stochastic momentum may be saying, wait, hold up, let's take our time. This may be a fake out. We're still focused on the downside here. So that's the conversation that I would have between an RSI and stochastic momentum. So stochastic momentum would probably give me a higher probability of direction, like overall. So a little bit of a kink here on the 10-minute time frame, but we're noticing that there was still some downside here, and there is expansion happening beyond that critical point of 15%. So if there is still downside on the 10-minute, let's find out how far that can go. So 15-minute time frame, there we go. We have a little bit of expansion happening here, meaning that we are accelerating towards the downside, right? Cool. So we're going to get that continuation into the 15-minute. What about the 30? If we look close enough on the 30, well, that's looking like it's starting to kink. So that means that we may be expecting a turnaround here. Take those signals. They're very serious. They're very important. So, okay, now we're identifying that we could have up to a 30-minute time frame. What about the hourly? Okay, the hourly has a little bit of a kink here, but it kinked down again. So wait a second, we may actually have continuation towards the downside on an hourly too. Holy crap. Let's continue. You'll find the reason. You'll find it. Hang on. Damn it. We still have downside on the bi-hourly, right? You're thinking to yourself, holy crap, this might go deeper. The hourly time frame, let's go back. Did we show any expansion on that? Actually, we kind of did, right? There's a little bit of a kink towards that upside. And remember, here's a little bit of here's a little note. This expansion phase is part of this candle. The closing of this one will be introduced at the next notch here. That's when we're going to see the effects of what this candle did. So likely speaking, this thing was already giving us a little bit of weakness here. The kinks that I'm talking about are these. See this one, we're down, 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 down. And at this point, it kinks a little bit towards the upside, right? You can see that kink kind of go towards the upside, but then right here, it drops again. The yellow line is representing the EMA3, the 3-day exponential moving average. The blue line is the averaged out SMA 14. Okay, holy crap, that's giving us further downside. So that means that the bi-hourly time frame is actually correct as well. And the bi-hourly has no kink at all. Just in case you guys need to see this, I will adjust the, the size of the text here just a little bit. I hated that. I did it only for my phone. And then it transfers over to the real chart and I get really upset. Okay, now we have that downside on the bi-hourly. How about the 3-hour? Okay, so we still have curvature towards that 3-hour down, right? Oh, damn it. Do we have expansion? Well, here's a fact that we need to remember. Volatility expands easier. There is volatility expansion easier when there is a downside. Volatility does not expand as easy as it does towards the downside, right? It does not expand easy on an upside. It really is a true nature. It really is gravity, right? What goes up must come down. So let's continue. Do we still have further curvature? 4-hour time frame. Damn, we do. There is a kink in price. ARCa said that this is critical. And we still haven't seen the close of this at the next area for volatility. I bet anything that volatility may actually start kinking up. What about the 6-hour? Okay, the 6-hour time frame, no contraction, and there is actually a pretty nice pivot towards the upside and in the gravitational zone. Remember your zones for gravitation. 2% up all the junctions and down. Mid junction would be your 48, upside 52. Those are your gravitational points, right? You are at gravitation in the bottom half, which is the bearish control zone. Your bullish control zone is the upper half. So 2%, you're within the 2% of the bearish control zone, meaning that you can continue towards an upside, right? So that would naturally pull you towards the upside. With this upside bias and no contraction, damn. But hold up. Is the 6-hour time frame telling us that we may actually still have a reason to go down? Maybe so, because it closed red. So we can't trust it just yet. Why? Because volatility may expand just a little bit here, and this stochastic momentum may enter into the bullish control zone, but resist at the gravitational point of the opposing side. So we only have to think to ourselves, damn, that may actually resist at the opposing side in gravitation. Damn it. Okay. What about the 8-hour? Okay. The 8-hour time frame has a massive red candle. Do we still have further downside on that 8-hour candle? We maybe do. Let's go to the 12-hour. And I would say that the 12-hour time frame would be the last time frame here. This may actually be where price action continues to the upside because this is a tiny red inside bar. It doesn't have too much. What about the daily? And the daily time frame has a reason for continuation, but we haven't seen those effects yet. So I guess in this case, I'm just going to use the 24-hour to determine what. So we also have a shooting star on the 24-hour time frame, and there is further downside to consider here. Damn it. Okay. So if we're talking about a potential, let's just give it 8 hours of retrace because in a discretionary feel, I felt like this candle's too small to gain any more volatility, and it's too small to not, I don't think it's going to curve or I don't think it's going to manipulate the direction bias of your 12-hour, right? I don't think so. It's too small. We have a $6.88 average true range on a 12-hour time frame. This thing opened up at $5.73 and closed at $5.72. It was $1 out of the $7. Yeah, I don't think it's going to shift it, right? These are the things that I want you to ask yourself as you go. Okay, so now if we made our decision here, we made the decision that, you know what, it's probably going to end up at the 8-hour time frame max, right? Because it does have a pretty sizable bar. It's still inside the prior day, granted that, whatever. And the 6-hour time frame does have a little bit of further downside, after another, these are two red bars. So I think that would be your max bottom. So the 6-hour potentially leading into the 8-hour. How do you determine the next price? Well, we're going to average out the largest price in the retrace because we noticed that the largest time would be 6 to 8 hours. The ATR gives you that information. $6.06 market. This case here, the 6-hour time frame would be expected to drop to 72. We have 70 at $2, right? So that can give us 566, 567, somewhere around there. And now let's go ahead and find out what's there. So 566, 567, we have, this area here. There's also the weekly, the 5-day low, right around there. So 560, that would be 569. So I think there's enough reason to go. Is there anything else that could be a 567? Well, here, there is a pretty critical low. And in fact, why don't we just mark off like a 566 or 567, somewhere around there, mark it off as a different color, right? Let's just see if there's anything there. This case, I want you to use your upper time frames. Just look around, explore, go to your daily, see if there's anything there, right? Okay, so it doesn't look like there's anything there, but there is apparently a big gap here, right? So that would be a reason not to get all the way down there, right? What about your weekly time frame? Holy crap, there's a gap right here. So maybe that's an area that can stop us from getting all the way down to here. Let's look at a biweekly. Damn it. The biweekly has an even higher valuation. Naturally speaking, this carries more weight. So that means that we wouldn't even get down to the lower point here. Right? Nah, ARCa, you're starting to make a little bit of sense here, man. Okay. Let's go even deeper. What about the monthly? We said the monthly has, wait. Holy crap. The month has a gap right there. But we did go all the way down that low. We did go all the way to 561. When did we do that? The 561 low that we experienced was just recently. We broke that inflection. So we broke the monthly. That makes it a little bit weaker, right? So we broke this support, but we are back at the upside of it. So there could be support at 572.45. Damn, that's really close to us though. So if it's within our range here, 572, look at the 12-hour close. There's a reason why it closed there. There's always a reason why price action is somewhere. 572.23 is not random. It's up to you to find it. The monthly time frame, bottom of the gap, is 572.44. But remember, it's a monthly. So what are 20 cents to a monthly time? That's your support so far. So let's go back again and think again. Damn it. So we have further downside here. Enough to say that the 6 hour has around $6 to $7 at the 8 hour. Okay. Let's go back to the immediate short term and let's see if we have any upside suggestion. So let's go to the 10-minute time frame, 5-minute time frame. All right, good. So 5-minute time frame does have an upside pivot with a lot of volatility expansion. So that gives us 5 minutes of potential upside. So if this upside is you're already getting a kink here, right? You have 3 black crows, potential short-term upside followed by downside, right? Well, that's giving us an answer there. 5 to 10 minutes of upside, what is it? 50 cents. So that would give us 572.70 right about here. And in other words, that's your 30-minute, 50% prior bar retrace. So, and does the 30-minute still have downside? Yeah, that one has downside. So damn it. 5-minute time frame or 3-minute time frame, 3 black crows, immediate short-term upside, confluent to your 30-minute time frame prior bar retrace. Okay, so that means that there is further continuation towards the downside. So if we do have something to figure out at the downside first, then we have to go and figure it out. What is it? I guess we're going to find out. Now, traditionally speaking, Mondays are what? Are they bearish or are they bullish? Do you guys remember this? Mondays and Fridays are typically bearish. So, but we don't know if Mondays are typically bullish for Meta though. But we are talking about a different asset than your S&P. So, okay, so that means that sure, we have less market participants on a Monday, so which means that still we can experience further downside. In fact, we were already making such a critical downside on this, and we have a psychological reason to. Head and shoulders. Okay, so let's mark off that head and shoulders. Let's just see what the heck it's got to say, right? Does it have anything good for us in the first place, right? I think I'm going to measure in fact, I think we're going to have to do it a different way. I don't think I can do it like that. Let me see. It's such an ugly one, right? Yeah, there we go. We're going to use it just like this here, right? Very, very, very ugly. And we're not going to use the FOMO wick. We want to use just your more confluent high right about here. So the downside target on this would be, damn, what do you know? Wait a second here, man. Mathematics were just telling us that we have maybe 6 to 8 hours of downside, which is 563.53. And the head and shoulders here for the day is telling us that we're right about there. Okay, shit. So that we have confluence here. So that's got to mean something. It's got to have some type of meaning for us. Right? Okay, so what if we can we determine that in any other way? Well, I guess we can, right? Let's take the example of the say the post-market low to the high on a Fibonacci retracement, right? So what if we take that information and put it right there? Oh, again, man. Oh, jeez, bro. So now we got a 4-spot 618 right at the freaking target of the mathematical probability retracement of 6 to 8 hours, which is also confluent to the head and shoulders, which is also confluent to Mondays being red. Okay, well, I mean, things are stacking towards that bottom side anyway, so I guess this would probably be the higher probability here. So immediate short term, remember what I'm saying. Immediate short term. Now, we identified that we have upside only up to this area here around 572.23. Maybe at your daily close of the natural resistance, right? Which would be your 573.25 or whatever that is. Your daily closed right about here. Right? That's your daily close there. So that's already resistance. So we could be, testing your prior day's close. And then we could be continuing to the downside here because we have very limited upside. The reason why we know this can happen into the Euro Open is because we are studying the immediate short term. We're studying the close of post-market Friday. So Friday post-market is already giving you the information for the next candles coming up. The only thing that can shift that would be institutional block trading. So that would tell us that, bam, this thing retraced all the way up to the daily because of its huge block trade, and then it could retrace. So that tells us those couple things. If we have a daily retrace, we could actually see it in the pre-market too. But we're not reacting to the pre-market. We're reacting to see where we're going to go overall. We're not talking about entry. We are not in executions. So we're talking about determining where price is going to go. So in this case, you can tell me, and I will excuse it because that's valid. We have block trades that are massive. You can tell me, ARCa, there is a 50% prior bar retrace on a 30-minute time frame, which the 5-minute time frame is indicating potential upside. Continuation to the downside could be observed because we have a 3 black crows formation, right, on a 5-minute. Yes, granted, 5-minute time frame, very minimal time. The probabilities of your continuation or the validity of the formation are very slim. That's not good. Daya, I know it's late, brother. I'm so sorry. I'm trying to hurry up here. Okay? So, if we are going to retrace that, that doesn't mean that it's going to be the area. It means that institutionally, there could be a shift here. You could say, you know what, ARCa? I think that there's a probability that we do this, test the 572.25, and then explode on an institutional trade because there could be that reason, and which is going to be confluent to your prior day 50% retrace, which then I believe there could be continuation towards the downside here. And I believe that somewhere around, let's just say that we have 6 to 8 hours of downside. Well, we're opening the pre-market at 1 a.m., 4 a.m., the Euro Open, right? 4 a.m. Eastern. So let's see, 1, 2, 3, 4, 5. Wait. So are you telling me that this could be all figured by market open, by traditional market? So from 1 a.m., so ARCa, your market hours, they open at 6:30 a.m., right? And you're saying 6 to 8 hours of downside. Oh, I get it. So there could be a shift. There could be a shift at 7 a.m. Guys, let me know what is at 7 a.m. My time, 10 a.m. Eastern time. What is that time? Tell me what happens there. That's right. There's a big closure there. Which one? Ones. What closes? Too many. That's right, Smoke. That is right. We have to concentrate, team. In order for us to know where we're going to go, we need to know when we are. When? 1, 2, 3, and 6 hour closes close at 7 a.m. So we're talking about 6 to 8 hours based on the information that we got post-market as well. So your major closes are going to be at that 30 minutes into the market open, 1, 2, 3, and 6. Your 1, 2 hours are always by default. At lunchtime NYSE, 1, 2, 4, and 8. So, ARCa, you just said that, we're looking at a potential 6 to 8 hours of retrace, right? It's feeling like it's going to be closer to the 6 hour mark because the 6 hour mark is roughly where everything is rhyming. Everything is rhyming there. So the 6 hour mark is the $6.06 of retrace in ATR, right? And also that's the 1, 2, 3, and 6 hour close, which is going to be roughly around your 7 a.m. or your 10 a.m. Eastern time. And it just so happens that it's also the 4 spot 618. Wait a second. It's also your head and shoulders target. What more do you want? What do you want from me? Okay, so That's your thesis. You're telling me, damn, okay, ARCa, I'm sorry, but I have to tell you, ARCa, that I know you said that you wanted to the minute of the Euro Open into the early pre-market into the market open. Okay, so what's in between this? What's in between this area? I'm gonna give it to you here because I'm not at the point where I'm gonna take it completely serious that you didn't learn. Well, this candle here has a massive gap. That's telling us that from the closure, look at this. You see how it says 4:30 p.m. for me down there? And you see how this next candle says 1 a.m.? You see that shift? That's what I'm saying here. So you're telling me that there could be a jump. So there's a reason for us to support there. What else is there? At that target of 569. Oh, damn, the 2-spot 618 is confluent to the freaking, it's confluent to the damn institutional trade. Okay, ARCa, my thesis is that yes, we could bounce to the upside in a daily retrace, early pre-market. From that early pre-market, I believe that we're going to bounce into the Euro Open into the pre-market of the 4 a.m., right? 4, 5, 6, 7, it's going to be 7 a.m. Eastern. We're going to bounce from this area here, validate either at this point because it's also at the 1-spot 618 or back to the close of the 30-minute. I'm going to bet that it's the 618 because everything happens there. And I think that I'm going to have to bleed a little bit into market open and use the 1, 2, 3, and 6 hour close as the reason for price action to completely reject and start making its ascent. So now we know what could happen into the 7 a.m. time frame. So at this point, you will tell me here by 7 a.m. potential retrace. The reason why we would go up is what? Well, we have earnings coming up. Damn, okay. So let's use the daily time frame now. Now that we know that we have this potential drop into this area here, the daily time frame is telling us that damn, we got we nailed it. Wait a second. What was that again? What? Oh shit. ARCa, in all that math and in all that 6 hour time frame and in all that head and shoulders, did we just close the gap? Well, why didn't you just say that? Why didn't you just, well, I mean, typically speaking, we have 80% of the time we're going to close the fucking gap. No, fuck no. You are going to tell me why we're going to get there mathematically. I don't want any guesses. No. You are going to give it to me step by step. I am not going to take it from you. No. We're going to learn it all the way. All the way. I can't just tell you that we're going to close the freaking gap. I can't do that, guys. No. Okay, so pretty damn good reason here. The shooting star worked. We got the downside. It was on average $6 to $7, and it just so happens to be the gap's low as well. Also, the head and shoulders on a 5-minute time frame. Also, the 4-spot 618 from the post-market range. There's too many things there's too many reasons for you not to give me. I can't have that. You have to show your work. In any math, in any type of college or university, you're going to have to show your work. You need to know why we got there. Okay? The next step is, okay, cool. So now we got a reason. Damn it. All we had to do was close that gap. Freaking crap. I should have seen that. Right? This is awesome. It's better. It's way better when you figure it out later. It's way better when you notice the confluence of everything coming together piece by piece, solving the puzzle. You solve it. You have to find out why. Okay? That bounce is going to lead towards the upside. Damn. Okay. So if we're using now all that tiny math, right? We identified that we could be getting those higher probability moves in that manner. Okay. Well, now I guess we would just bounce to the upside because that's what we figured we were going to do. Right? There are many ways to observe this. Take a look at this trend line here. Use your imaginations, okay? Use your imaginations. Because if I were to, we know that the 4-spot 618 is there now, so let's get rid of that, okay? But what would happen here if you just did this? What would happen if you did this? Because this is where we're thinking we're going to support, right? Roughly around that yellow line. Okay, well, does that show that we have some type of something happening here? And does it rhyme? You know, we could be entering an ABCD strategy where price action goes from the bottom side on X. You go to A, right? A suggests a continuation all the way to B, which is down here at the lower part of the channel, which just so happens to be the confluent area of all the 4-spot 618, the gap on the daily, the freaking this, the freaking that, the freaking this, the freaking that. Okay, great, amazing. So that would also mean that we would bounce to the next upside. Wait. What is the next upside? Hold on just a second. Oh, shit. We have the monthly retrace up there. So there is a reason for us to get... Wait. It's 5 days away from closing the monthly. What happens as we close the bar? We retrace into it. Are you guys catching every single reason you would need? And you ask me this. You ask me this every day. You say, ARCa, what is Wolf going to do? ARCa, what is Merritt going to do? ARCa, what is this going to do? And every single thing that you just saw here and I explained over the last hour is what I have to think about in order for me to give you my answer. All of that information is given to you in freaking 3 to 5 minutes. I am going to get you there. You will do this that fast. So now you know, okay, what's the daily ATR on this? Let's go real quick. Because from here, it doesn't even matter too much. $12, right? Okay, $12 to the upside. Let's go back to that hourly time frame where we were. So we're suggesting, typically speaking, the market's open roughly where you closed, right? So we have a potential opening at around 572 and also around 573. So let's just say that the market's open at 572, right? So you have $12 on ATR towards any direction. We already got the downside and we're already at the support of the channel. So what happens from the 572 open? $12 up takes you to 584. The monthly retrace is close to 583. But what's 584? Why would it say 584? Guys, 585.01 is your pre-market high on Wednesday, okay? Your monthly retrace is 582.71 already at 573. You hear me? VWAP is giving you an upper standard deviation of $582, which is confluent to your 582.71 of the monthly retrace. Oh my goodness, guys. To me, this is entirely obvious. To you, it's not yet, but I need it to be. Okay, so that means that from 572, we have a whole ass day to continue towards the upside. All you do is look left at that point. So now we know we're going to bounce short term to the upside here. Daily retrace could be the institutional block trade. Come down 4 a.m. We're going to bounce from this gap that has confluence with the 1-spot 618, right? From that area, we validate the resistance of the post-market close. We come back down to the confluence of the head and shoulders low, the 4-spot 618 retracement at the very bottom side, and the channel low. So we bounce to the upside from this area, right? We would come back to the prior day's close, right? Up the same direction. We come back down at the 1-spot 618, which is this area here, that gap, right? We bounce from that area. We continue towards the upside. Whatever this area was here was your prior day 50% retrace. This 50% retrace, we resist from the prior day's close, and we come up towards the upside where I believe that there could be a range between 582.81 and 584 or 585.01. So my overall target is that we would be potentially reaching the pinnacle of the day at this point, maybe closing at the 50% of the day as it goes into power hour which is usually red, right? But I don't know that we're going to close red in this time around, ARCa. We have earnings coming up. You can't forget that, ARCa. Don't forget that. So we may actually have a green day on Meta. Meta may price the markets green on this one shot. So I think that we're going to end at the 50% of this channel here, somewhere around 578. Whatever the 50% of that day is, I think that's where we're going to close. That is what I want from you. It's going to take practice, guys. It's going to take practice. It's going to take a lot of discretion. It's going to take a lot of imagination, and it's going to take a lot of remembering every single rule. Remember the 60 to 70% chances of your prior bar retrades reaching 30 to 50%, right? Rewatch this video. This is going to be one of the most critical videos you will ever have from me. Putting together that entire thread of analysis is what I want from you. Let's do it. And let's make sure to have it ready before Monday. Have this ready by tomorrow night, my time. Let's see your thesis. Let's see if it works out. Let's sharpen our edge and make sure that we can get this done. We have work to do. We have money to make. We have strategies to build. We have a family to take care of, guys. It's make or break. It is make or break. I'm going to take you a little bit. I'm going to take you just a little bit into psychology here, okay? Just a little bit. On your trading desk, grab a picture of your kid, yeah? Grab a picture of your mother or your father or your entire family, whatever matters to you the most. Put it in front of you so that it works as a reminder for you not to be a fucking idiot when you're trading. Make sure to always remember, every single day you come into the trade, look at that picture. Let it be a ritual. Every single day you get behind that desk, you come to see that picture or anything, guys. Whatever it is that means a lot to you. Look at it and remind yourself why you're trading. Because without that reason, you'll never make it. It has to be greater than money. It must be greater than money. It's just a tad bit into your psychology mentorship coming after executions. Just a little bit. But I need to sharpen your edge before we can execute that edge. And then we're going to sharpen the execution before I can sharpen your psychology. And then when your psychology has been sharpened, I expect you to be better than me and anyone else out there. And I mean that wholeheartedly. I take this very serious, team, and I promise I mean the best. This lecture is now over. Make sure to have your assignments done by tomorrow, before market. I don't care what time it is. It can be, just do not let it be a Euro Open. I need your thesis. Rewatch the video as much as you can, guys. Try your best. Now, if it doesn't happen into Monday, it's okay. Tell me, ARCa, I generally don't have time, so I'm going to do Monday to Tuesday. Or I want to do Tuesday to Wednesday. It's okay. You can also say, I'm going to join the master students on Monday to do maybe Wednesday to Thursday. Whatever it is. But I encourage you to do it over this weekend because sometimes we have time. Make the time. So, Torito saying, I need a lot of practice in reviewing, but this class was insane. Brother, this is, I really meant it. This is the turning point for all of my strategy students. Anyone who has been with me this entire time, this is the critical shift. And I've already been conditioning Jen for this, you guys. Oh, Jen, you're very welcome. Now, Sherlock saying, ARCa, I got in late. I just got home. I've been traveling and missed part of the class. I will rewatch it as soon as it's available. What's the assignment? So the entire lecture is the assignment. It's for you to give me price. I need you to give me where price is going to go from the Euro Open right? Which is for me at 1 a.m. Pacific time, it would be 4 a.m. Eastern. I need you to give me price direction. So where it's going to go from Euro Open to the early pre-market, which for me is 4 a.m., 7 a.m. Eastern. And then from the early pre-market into traditional pre-market, from pre-market into the intraday session, into the midday, at the close. What is price going to do? And I show you how to do that here in this lecture. Now, remember that you don't have to complete it, Sherlock, by tomorrow. Maybe you can do the Monday session with us if you're available. But you can also, participate on this, sure. No problem at all. So Ripe is saying had to do that to keep my old job. Helped me stay away. Let's see, 5 years before I changed careers. You had a dozen of images of my son in my desk, dude. Yeah. It'll remind you, man, not to be a degen, Hydra is saying this is by far the most challenging assignment I will attempt and probably fall, but I'm up for it. That's what I'm expecting. I'm going to be honest with you guys. I expect you to fail. Because I will, guys, I did. And I still do. I'm not, no one is perfect. But the more we try and the more it's just like at the gym, guys. It's by rep. Don't give me the freaking huge weights. Give me lighter weights so I can do more repetition. So I can condition further and further. Now, Stu is saying I was confused for a minute. It didn't look like you had the extended hours open on your chart. Right. It's just a little bit shaded. Jen is saying, thank you again for this gift. I love you, Jen. Ripe is saying, I get it. It doesn't need to be right. We just need to practice our skills. We are learning and apply them. That's right, guys. We just have to practice it. We just have to drill it. This is the beginning of our sharpening, right? This is the awakening here. Okay. Now, Niz is saying, what a great class. My brother, I love you, dude. So Torito's saying it really was incredible. If there was one lecture, this is it. Man, I know. It always feels like that, but trust me, there's more. There's a lot more. There's so much more. But guys, I'm going to take you to a point to where I'm going to take you to a point where if somebody tells you something in a chat and you're thinking to yourself, you're giving this chart, let me look at the chart. You're going to say to yourself, let me look at the chart. I want to see the setup. And then you start going over all this criteria. Imagine what you can rebuttal with. You're going to say on anything, currencies, crypto, bonds, futures, Forex, traditional equities, volatility index, anything, you're going to be able to say, I don't think so. Well, probabilities of this week, probabilities of this day, the month that we're entering has a statistic of this. Well, there is also a massive closure that, there's this psychological reason. Also, it's a freaking Monday. It's red typically. Well, you know what? We're actually entering earnings. There's a whole bunch of things that you're going to go through your mind and you're going to say, no, it's not going there. I really don't think we're going there. Which is where I want you to be. I don't want you to ever have to rely on anyone again. Ever again. No one ever. That's what I did for Sebastian. He's one of my, I did that for Buzz, man. They don't have to rely on me. Dea doesn't have to rely on me. Jenna, these guys, come on. They don't have to be here with me anymore. But learning and refining what I'm doing here may actually introduce some further edge to their criteria. Maybe they want to know how I personally approach it, and they want to apply it in their own way. Because as a student to this craft, I'll never stop learning. Guys, me either. I still go and listen to many, many traders. I still refer back to Mark Douglas. I still refer back to Tom Hugard. I still refer back to the quantitative approaches of both Jim Simons and Dr. Ehlers. I still go back and I still listen. And I want to know where they were or where they are. I still go back to even Eric Crown. And I want to know where he is. Because at this point, the person that Eric Crown was to me a year and a half to 2 years ago is nowhere near the person he is to me now. Now, now I defy what he says. I challenge it. You know, and that's what I want from you. Sebastian doesn't have to do this with me anymore, guys. He doesn't have to. But he will tell you wherever ARCa goes, I go. The guy has a massive bank account now. He's good. He came up to me as a track 1 student, not knowing anything. Anything. And he came out of this just like Buzz, just like Jen, just like Daya guys. These guys, you know, they've been with me for a while. I appreciate that, you know? So I'm going to further your edge. I want to further it and really refine it because I'm a competitive person, team. I raced all of my life. You know, motocross, I was sponsored by, it doesn't matter. I've always been very competitive and I've always had a very competitive approach to things. And I want to share that with you. And I want to share how that's done so that maybe you can provide for your families. And then if that does happen, then you may have a reason to continue helping others and pass it and, you know, pay it forward. Because it's when you start teaching it that's going to create your deeper edge. Always, always try to teach it to someone. Someone is going to know that you're in your family and your friendships. Someone is going to know that you're doing, oh crap, you stay being right. And then that person is going to ask you, well, what do you think I should maybe whatever? Well, you then say, well, you know, I'm still a student of my craft. I am getting good. So why don't we look at what you're observing and see if we can, you know, brainstorm on it. And then you start explaining the thesis as to why this, why that. And that's going to introduce you into paying it forward. And you repeating the strategy out loud is sharpening your edge. I have to repeat this to you guys every single day. So you are the reason why I'm sharpening too. Guys, I don't mean to sound like a shill. I just want you to be there with me because if I can dedicate really these, you know, 50 weeks to you, then I think I can turn you into different animals. Buzzman saying, love you and your teaching, ARCa. I need more. I'm continuing my education with you. So much more. I could not understand all this with anyone else's teaching style. Dude, thank you, brother. I felt that I just needed to speak the language of people. You know, maybe we just need to have a conversation and talk. Torito saying, I know you're like an infomercial, but wait, there's more. See you at $20, says Speedy. Speedy, you know what I'm talking about, bro. I don't care how many millions you may be worth. I don't care what no. I'm just not going to trust it, guys. It doesn't mean that I have to be, it doesn't mean that I have to be smug or disrespectful, but I am getting aggressive is because I care about my team and I care about my students. And I see, and I know that you guys see how much effort I put into this and how I observe price. And now you're seeing like, dude, this 1 hour lecture of this overwhelming information is what this guy gives me in 3 to 5 minutes. It's now you're going to say, wait. See you at 20. What got you there? What, how, when? You know, now that you're seeing the structure of the trade, you're gonna stick your middle finger up anyone. You're gonna be like, yeah, right. You can go ahead and blow your account up, bro. I'm good. You know what I mean? Keep it, guys. Thank you, Sherlock. That's very kind of you, brother. That's an incredible layout template. Sorry, guys. Am I missing? I think good luck. Daya, I love you, buddy. I didn't, War G, he already left, right? I know that it's really late. Daya, brother, I know that it's probably freaking in the wee hours of the morning. You're going to need 7 cups of coffee to continue. Brother, I love you so much. I know that this This took a lot of preparation for me, brother. And I really had to make sure that I can express it to you as best and as clear as I could, right? I had to think about this and write it down in so many different ways. And I realized that the structure can't be written because there's too many factors that happen every single day. It's like, what if we didn't have earnings on this? So that I can't write this. So I can't put this into that criteria because if that, then there's too many what ifs, so it has to be discretion. ARCa, do we have to pick a ticker that is due earnings reports already? No, nothing at all. War G, I love you, brother. So we don't have to choose any ticker with any criteria. You choose it, anything. You can choose. Well, that's an advantage, right? Using earnings, so then you could check in your artificial intelligence to see if there's an average upside on the week leading into earnings or whatever, right? So you can use statistics. You can use whatever system you want to determine price, which is why we spoke about the strategy. Starting strategies. We spoke about the language model, potential price anticipation, or probabilities as a mean to save time. So I encourage you to use your systems or digitally or however to gain an edge over this. Whatever it takes. I don't care how you get there. I care about that you show me the work. Just get there. He's saying, got it. Thanks again for a great lecture, ARCa, and good night, everyone. Rest well, Dea. I will talk to you soon, my brother. Please be safe. And Ripe is saying, I'm still going to try to make a basic checklist for the assignment to look back or later on myself. And that's what I meant, right? So for your criteria, you're probably going to have to write this down. This video is going to be your overall journal for it, sure. But that's often what I get, guys. I often, a lot of my students say that I'm going to probably write this down and see how at least I can start approaching it, right? So I can remove a few things here that don't have to do with this because we're not going to earnings on this, and also whatever reason. But most of everything kind of has the same closures and whatever else. So the primary checklist would be a good way to it's just the bones of it all, right? I think that's good. Now, Ripe is saying I got 2 pages of notes already. Yeah, and see that's what I would do also when I would write things down. In fact, I would write down my notes, sure, into this thing, but what I did was that I took clips on my phone and I would screen record the areas that were most important for me, like from the traders that this is for you to maybe use if you want. I would catalog a series of clips of videos of screen recordings, and I would make for example, this has to do with volatility. So I'd have a volatility section of videos. I would have another video section of price action. I would have another video section of formations, all from either the same person or different people. But every little clip would be anywhere between 10 to 26 seconds long. And they would be great reminders for me, of the traders that I respected. And that was kind of like my note taking, right? Because I was always watching someone. And then when someone would give these information pieces, I would be like, wow, like that was incredible. So I would immediately just revert back on the video, reverse it, and just press play or screen record it on my phone, depending on where I was. So if I was behind my, my studio, like for example, this, you guys look. So you guys know already. I already showed you on Friday, right? So if you're looking at the screen, of course, team. So if I'm talking about me being in front of this section here or in front of my screens down here, and I'm noticing like, oh crap, you know what? This is great. I'm noticing here, this is a very cool part. So I'll grab my phone and I'll literally start to film it just like this, right? I'll film it just like that. And that's going to be able to give me like a piece of note. So then I'll catalog it, and then I'll continue watching the video again. And then I'll catalog it again and whatever else, you know what I mean? That's typically what I tend to do. So I like writing things down like that. Because it gives me it gives me a sense of structure, right? It gives me a reason to look back, a reason to uh, whatever, right? It just gives me reason to put together a criteria or a system that's going to work better for me in the future. And that's the greatest thing that I can observe for you. I can give you notes like that, and they'll work. It's all good. Um, if you have things like that, use them from me, right? Use them directly from me. It's like I have plenty of videos and stuff that I have plenty of videos that I've released to you. Ian would tell me himself. Ian would say, dude, I often find myself going back to your videos from like a year ago. And I noticed that there's always like a piece of like information that there is. No, it's a brand new shirt. I just got this shirt and I laid it out here to show a picture to somebody because I love the essentials material, So yeah, team, that's pretty much what I'm talking about, guys. If there's any way that you can be inspired, right? I'm just going to give you the way that I did it. I was lazy at writing notes. I was really lazy at writing notes, and I didn't want to put that down. It was annoying for me to always have to write something down because I had to write it down. Fucking writing it down is annoying as hell. You know what I mean? I don't want to have to do that all the freaking time. I don't want to do that, right? So if I can avoid doing things like that, then I'm going to be okay. I think I'm just going to use technology and let it do what it's going to do for me, and that'll be what it'll be, It'll be all good. So sadly my brain needs me to write things down. Yeah, and that's okay. A lot of people don't, lots of people don't know that they're probably hands-on learners or whatever, who knows? It is what it is, guys. It doesn't fault you or anything. Here's what I can say about me. Psychologically speaking, I am an incredibly lazy person, right? I'm super lazy. I don't like having to write things down all the time. So I'm likely going to find a reason to do something in the shortest amount of time and perform it the way that it is. I don't care. I really don't. I don't care what anyone thinks, and I don't care what they say, right? I'm just going to do it the way that it is because that's the way I do it. So think about it the way you guys will. You know what I mean? Be you. Show your edge in your own way. Flowcharts, that's really good. Let's see. He's going to pull a rabbit out of under the shirt. Jen saying, daughter just got an Essentials hoodie. Oh, you noticed the brand. Yeah, so I'm hoping she hates it soon and gives it to me. So I often wear things like that. Look, so I have a bunch of essential stuff, like a lot. I wear Palm Angels. I wear a bunch of stuff, I like all those, they're bougie. It's just this new I think the fall release, the fall line of essentials came out, and this is what I'm liking, right? The huge neck, the crew neck is fire, So that's that. I love that. So I have a black one of this now and a tan one. And it looks cool. That's Jen, damn it. You noticed it. That's good stuff. And that plugs here for my ears. But yeah, team. Let's see. Torito saying I need to run. A crazy day, but had to stop here for learning. I will see everyone tomorrow. Torito, I love you, buddy. Please be safe and be well. I will speak to you very, very soon. Options. What's up, buddy? Crew necks are great if your head is massive. Fair enough. I like it. I like it. Stewie, I love you, my brother. Please be safe, be well, and we will talk very soon. My bro. They must for you. Yep. Niz, I didn't see that, buddy. I'm so sorry. Saying your setup still kills me, man. It's absolutely mad. You have so much to do before you even chart. Well, there's a thing here. Hold on. It's this over here. You see that where this light is, right? That silver thing, and this with the blue. I'm going to turn on the lights on that thing so you can see it. That, right? The thing with the lights, those are my power distribution. Those are power conditioners. So turning on that big blue and turning on this right over here, that turns on the entire system. So I also had to kind of, set this thing up in a way that I can make it really easy to turn everything on, So those conditioners are connected to a power grid under the desk that has a battery unit in case price action, in case, I'm sorry, I was looking at the price action here. In case power goes out, I have 9 minutes of battery total to close out everything and safely turn it off and whatever else. Running the market is which button again? So, I trip a lot of people out when with this, right? So this is what I mean. Look, check this out. So my console has several settings, right? Especially for tests. So I can do something called a Vegas mode on this, right? So that's something that a lot of people like to see. And whenever I have people coming into the studio, they're always like, holy crap, like, dude, what is all this? Like everybody trips out, so, and here's the huge machine. But I like showing this with you. I like showing this to you guys, right? Because I know a lot of people get a kick out of these things and it's cool. It is cool. I like it. But yeah, team. So I want you guys to please do your best, guys. I don't mean to be mean. I don't mean to be anything other than, completely supportive and badass to you. You know what I'm saying? So yeah, you guys. Yeah, you can see the audio unit here. Check. That's an incredible setup, man. It's like Christmas on your desk. Yeah, dude, it is, man. I just use it to wow some people sometimes. Everybody's like, holy crap. I would be distracted. Yeah, dude. Oftentimes you could just leave all the LEDs on just like that. And just let it do its thing. But yeah, dude, it's, this is for audio control. ARCa doesn't like dirty things, including power. I don't like dirty power. Nope. Because I'll get hum. Notice, other than gates and stuff, listen carefully, right? If you're in headphones and I stop talking, listen. It should be complete silence, right? It should be clean. I don't like the humming and the buzz and stuff, so I will be very, 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 very organized about how I do things here. Thank you, bro. I can imagine you in show and tell in kindergarten, always having the good shit to show. Oh, dude, we were so broke, bro, when we were, when I was that age. My family didn't have that much money. Oh man, it would have been cool though. I probably would have. Yeah, dude, I remember you were telling me, bro, that I remember, dude. You had a rock to kick around. Is that toilet paper? It's, well, I don't know. This is from Costco. The Kirkland, is it Kirkland? Oh no, it's the I forgot which one it is. The one that Costco sells, right? Kirkdale or Kirkland. Or is it Kirkdale? I gotta be tripping. See ya, Buzzman. I love you, my buddy. Now, Destiny saying options. Do you trade Polkadot cryptocurrency? The dot network? Come on, let's go. The Polkadot has excellent application and utility. The things that you want to trade in that would probably be the things built under the network, right? Similar to trading anything under the Solana network, or there's a lot of gaming under Ethereum and Solana and whatever else, Very good stuff in there. Did I miss something? Sorry, guys. Ripe is saying I use UPS also for my setup. Yeah, dude. Yeah, I have that UPS right down there. It's like freaking like this big, and like it's got a screen, USB controlled, all that stuff, dude. It's nice. Smoke, dude. That picture of people. Oh my goodness. It feels like I would sometimes, dude. When I I'm really efficient at all this when I'm recording audio, dude. So it's like people don't even know half the shit I'm doing. These types of surfaces are supposed to replace a mouse. Yes. I'm gonna post a video when I log out, my brother. How does the video quality look like on your end? Is it sharp? Does it look good? Okay. Let's see. Oh, you're running 1080p? Oh, yeah, okay. Yeah, because I set it to 1080p. I didn't really, and that's because I'm streaming onto YouTube, and sometimes when I split the stream like this, it kind of hinders one way or the other. It's all good. It's all good in the hood. So, but yeah, you guys, I like to. I've been starting to kind of show myself like this because I don't want to. I don't want you guys to feel that you're talking to some like random. I don't know. I am a random person. I guess I am, right? But if you can maybe put, maybe have any type of idea, then this is me. This is what I do. This is where I am all the time. I love this, guys. I love doing this. I really do. You're talking to AI? Love you, buddy. Oh, man. Hydra saying, you're going to start streaming like this? I like seeing this. Should I really? Because the way I would do it would be probably something like this. I'd leave myself in the bottom side of this or whatever, and so that I can be able to show. So I can show the chart. And I know that sometimes whatever here, but I always have this. The stream deck is how I control the stream, right? So this I could just make myself disappear if I need to show something on the bottom left. But I often forget about things like that. Right. You can help with placement. Yeah, dude. Absolutely. And, I think that, there's ways around this, right? So where I could maybe, this entire screen here, this is something that I have purchased designs for, you know what I mean? So I can leave it like this or something, and this video thing could be done like this, and you'll see the artwork surrounding this screen here, and you'll see artwork surrounding this screen here with a background. This is also a way that I can do things. You know what I mean? So it's just like, I've been observing how influencers do like setups like this, and it's pretty cool because that way, if I have somebody else that wants to join in with me, then I can have them add a box over here of that person. And maybe another box here for the third person. But there are many ways that this can be done. But it looks pretty cool like this, right? It looks pretty damn pro. Let's see. Got more than enough digital real estate to make it work for sure. Yes, dude, definitely so. But yeah, man, I do like the only thing I don't like is that, I can't see everything. Like I know that that's the IWM. And that's about it. I know that this is NVIDIA because it's so obvious. But yeah, nonetheless, I could make it work. And this is the side this is what I'm projecting to you. And this is the side I'm actually working on here on this side. So I work on this left, but I'm projecting this side because the 49-inch screen is two 27-inch displays, but it's one curve. Well, in fact, it's like four 27 inches because I can show you see YouTube is on the top left. I can display to you that. So I have different zones. I have all kinds of zones on this thing. Like, for example, this side down here on this screen, that's, that's this. And I think that I even have, actually, I'm not showing my portrait. Let's see. Yeah, it would be that one. What the hell is going on? Yeah. So this, what I'm showing you here is just, I need to bring that down like this because it's 37 inches tall, right? So you're going to see this whole screen here, right, is what I have to do. I have to do this in order for me to show it to you. You see how, you see what's going on here? Like, that's how I have to kind of set it up. This, yeah. This thing here, guys, all this is this screen. It's ridiculous. Let me see, brother. Oh, dude, the shortcut's nice. I want to, let's see, I can help. What did you say? I run two windows with half the tabs windowed behind each other with all the top of the tabs showing. Dude, I used to do that. But I can't because there's always so much request and so much chaos. I can't I can't, there's always something different happening. I'm like, wait, hold on. So I go somewhere else and I run somewhere else and oh my God, dude. There's always something. Yeah, dude. I guess I'm still coming into my own, even despite all these years. It's influencing. There's always something. There's always something. But still, dude, I actually kind of like the way that I'm displaying this to you. It's not bad. The only problem with this is just that it's such a, small, it's such a small zone. But it looks kind of like a laptop. It's still cool. It's still okay. Are you guys able to see the chart clearly still like this or no? It really is? Oh, nice. Just to put like a pro layout or something. I want to, I don't know what to do. I want to do something. So I've actually been thinking about this as of late. Yeah. But guys, if we I don't want to hold you guys back here too long, right? I love hanging with you guys. Trust me when I say, man. But if you guys got things to do, don't hesitate, guys. We can always move it. We can always move it along. If you put yourself at the bottom, it gives you more real estate of the chart. You're right. You're right. So doing something like this. And just to make it appear as though I'm like, using it as a background or something. Like, and then I guess I would just diminish the size of the video capture. Damn it. This thing on top has. Oh, you know what? I would undo that though, because it would have to probably be around this screen only. So something, I guess, like that, right? And maybe just a little bit. Something like this is what you mean, right? And then I would put the designs over the individuals. There are plenty of ways of doing this. This also looks good. I feel like it's. I feel like I could. I mean, this is a lot of space. I'm not gonna lie. The width is always a good thing. But yeah, I guess we're introducing the potential future, right? The the potential future here. Yeah, for sure. Because this thing, like the layout itself, I could put this layout individually somewhere else, like you know. But it has to be a square. That's my fucking problem. I don't know how to like extend it. Or maybe I just have this thing as a tiny one for my for me. Like for around the video. Things sort of like this, right? Hold up. Yeah. Well, I still need a little bit bigger. Oh my goodness. How's that looking? I feel like it still needs to be a little bit bigger, right? No, I've never tried fancy zones. This is what on top of me instead. Oh yeah, I think I could actually. What screen is that? Video capture. Where's my overlay? Hold on. Yeah, like this. You were right, sir. That looks much better. Like a lot better. Dude, sick. Bro, thank you. Oh, I love it. And Sherlock, thanks, dude. You can do 4 streams at once on Discord. What? That's awesome. I'm gonna check that out, dude. Thank you so much, Hydra, for that link. I can't wait to check that out. But dude, this is definitely like a pretty cool. I feel like this is definitely a possibility. You know, like I kind of want to keep it like this for a while. I want to feel it out. And I could also group. Actually, can I group a group of things? Because I would have to no, damn it. I have to figure that out. Because I already had, the overlay is a group of things. The overlay is a group that's the fade in, the fade out, the sound, and the image all together. For Discord, this is what you see. Let me see. Whoa, how does that appear like that? Yeah, oh, dude, it's like I'd have to reposition this thing again. I guess it doesn't take too much of an effort, you know, to resize this whole thing. Because this is what I use to, I guess I can show the chart first, you know, I can, because this is what I mean. Look, see, that undoes itself and the video capture goes away. So I guess it would probably be something like maybe show the chart first and then this. So I already have see, that's the thing. I want to know if I can, you know how you on Photoshop, you can, I think it's called rasterize. Is that when you make it like one thing where you just commit, right? I think that commitment is something that I would need for the overlay. I don't know how to do that. Or I could just add the video into the overlay. Yeah, I think I would have to add the video into the display capture. Let me see. Oh, yeah, I could. Oh, damn, I can't. Because if I add it in there, it's using the sizing of it's using the sizing of the surrounding thing. So when I put that in there, when I put my video capture in there, it became so tiny up in the top left because I had the size. It's taking damn it. There's a lot of things that I need to look into. Like how do I have it not be affected by that sizing? Make it a duplicate under another name. Wait, hold on. Does it matter where? You see where it is? Look at right there on the top left. That's where the video is. So maybe if I can do the, yeah, I can't individually size. Oh, can I? I think I could. Hold on. Oh my God. Ah, yes. Fuck yeah. And now I can do this. Oh my God. Yes, Lord. Oh, man. Oh, dude. That is outstanding. Fuck yeah. I can't believe it let me do it, dude. That is awesome. Hell yes. That was pretty fucking awesome, bro. Thank goodness. I was, dude, there's always some complication with this. And I always try to put the ideologies of Pro Tools into it. You know? Sherlock, dude, thanks, man. It really is. I think I should. I'm gonna look for another. I'm gonna look for another. Should I stylize the top one, or is that too much? Should it just be the bottom one? You know how I put that border around me? Do you think that if I, dude, you know what? I'm gonna stop the streaming on YouTube. Everybody just watching me set this up. Oh my goodness.